2024 was a good year for financial markets, and once again, gold's performance stood above the other major asset classes, returning 25.5%, while the S&P 500 was just up 24%, and the Dow Jones just 13%. Bonds, only 1.4%. This further extends gold's 25-year outperformance of these asset classes. Let's look at some of the driving forces for gold's strong performance in 2024, and look at what this year may look like. 2024 was an election year, and that always creates uncertainty, and uncertainty drives demand for gold. While the uncertainty of the election is behind us, new and yet to be determined policies introduce a whole new set of uncertainties the world must navigate. President Trump has been clear about his intent to bring manufacturing jobs back to the United States, and that his preferred method of accomplishing this is through tariffs. While the intent is clear, the impact is not so clear. How quickly can companies adjust supply chains and acquire new skilled labor? What impact will higher labor costs have on prices? How will other countries respond? With retaliatory tariffs as they did during the Smoot-Hawley tariffs that worsened the Great Depression? Most economists agree this will likely lead to higher prices, at least in the near term. During 2024, central banks around the world shifted from tighter to easier monetary policies. As many economies around the world continue to struggle, this trend is set to continue through 2025. While easier monetary policies are intended to increase economic growth, they also lead to greater supplies of money in circulation and expected inflation, increasing the demand for gold around the world. As foreign central banks led this monetary easing relative to the slower pace of the US Federal Reserve, the dollar has strengthened considerably against other currencies. This was acting as a headwind for gold in 2024, despite its still strong performance. The dollar's strength could reverse in 2025. When the dollar gets too strong relative to other currencies, it wreaks havoc on the global financial system, and coordinated efforts are generally made to bring the dollar back down to reduce the strain it causes. During President Trump's first term, he advocated strongly for a weaker dollar to boost United States export competitiveness and reduce the trade deficit with China. If the dollar is weakened from its recent highs, this can act as another tailwind for gold in 2025. Additionally, central banks have continued acquiring gold to diversify their reserves, a trend that has remained strong since the 2008 global financial crisis. In 2024, central banks acquired nearly 700 tons of gold just during the first 3 quarters. This trend is likely to continue, if not accelerate, as the world continues to push towards new regional strategic partnerships and deglobalization, through which numerous countries are looking to reduce their exposure to US influence and the dollar. By increasing their gold holdings, they can increase confidence in their own currencies and create new opportunities to expand trade between one another without as much reliance on the dollar to intermediate between them. This is of significant importance to countries like Russia, China, and Iran, and their primary trading partners, to mitigate the risks of US trade and monetary policy, and even sanctions. Finally, there's debt and deficits, and not just for the US. Debt is a global problem standing at more than $323 trillion, and it isn't getting any better. Countries continue to spend more than they bring in, and there's little anyone can do about this as the world's population ages. With the expenses of caring for an aging population and relatively fewer working-age people in the workforce to support the increasing deficits and debt burden, central banks are left with little choice other than to continually increase the supply of money to make up the difference. This allows debts that are never paid off to be continually rolled over. And since more must be repaid than was borrowed due to the interest on that debt, even more money must be created to prevent defaults and collapse of the financial system. Since 2008, these monetary policies have been one of the strongest underlying forces driving all asset prices, giving a specific boost to gold, a well-known hedge against this sort of monetary inflation. Gold's impressive performance in 2024 reflects its enduring appeal as a hedge against geopolitical and geoeconomic uncertainty. As we look to 2025, it's clear that many factors that have contributed to gold's outperformance of other major asset classes are likely to continue, if not accelerate, further cementing gold's role as a safe haven and strategic portfolio asset.